Welcome to Built for This, the podcast where real estate meets real life skills. Hosted by Andrea Lane and Alyssa Bicar, each episode features investors turning their unique edge into long-term rental success.
Hello and welcome to the Built for This podcast. I am your co-host, Alyssa Bicar, the consultress, here with the one and only co-host, the fearless real estate investor, Andrea Lane. Together, this dynamic duo, we interview people who are doing real estate investment business, bringing who they are from their previous life, their portfolio, and bringing that business sense and who they are to the table to have a successful real estate investment business. So, Andrea, who do we have for him today?
So today we have Noel Christopher, and thank you, Noel, for joining us. We're very excited to have you here.
You're welcome. Happy to be here.
Yeah. So my first question to every guest is, why did you get into real estate?
So I got into real estate for two reasons. My family was always into real estate, and I used to have a job where I traveled around and gave sales training seminars for a guy named Tom Hopkins. I don't know if you ever remember Tom Hopkins, right? So I promote his stuff, and Chicago was one of my markets, and I gave a whole 3-month training seminar session for a commercial real estate company, and I ended up staying there and working, and that's how I got started in real estate specifically, and that was back in 1998.
That's great.
Yeah.
So, I didn't mention, but you own 20 residential units, and they're all in the Texas area, some in the Texas area. How's that mix?
They are all in the Texas area now. I've owned residential real estate all over the country. I was in Chicago for a long time and owned there, in Alabama, in Florida, Georgia. I've always been involved in single family rental real estate after my commercial real estate career, and acquired tens of thousands of homes for institutional funds personally with my teams. And so I've always kind of picked off good deals here and there.
Cool. Sounds like you had the cream of the crop selection there, buddy. Like what you were doing full time lent itself very well to analyzing and picking the best of the best.
Yeah, it was their cast offs, honestly, where you look at it and scratch your head and why they don't want to buy this house. There's a lot of those.
That's a great way to get into it. What do you like
Absolutely.
most about real estate? What's your favorite thing?
I like it because it's unique. And it's very linear. I mean, in a sense, you can look at something and understand a market and understand why you want to buy a house in that market, so you can build your thesis, right, of where you want to buy and how you want to buy. And then it's about finding the right deal that makes sense. And the numbers are the numbers. And a lot of people think it's very loose and kind of shoot from the hip, but it's really not at all. And then it's after it's managing the real estate, which is, it's really easy to buy. It's very hard to manage. And so I've worked for, a couple of property managers that I helped build on a very large scale. And so I've learned that side of the business as well. And I like it because it's so unique, and it's more interesting than being in the construction business, because you're not fighting for your money all the time. You're optimizing and figuring out how to offer the right, tenant experience and how to leverage your investments properly and things like that.
That's great. So, you worked in the sales industry and you sort of merged into commercial. And then, so how did your sales end up really working for your benefit in the real estate industry?
So it's interesting. It helped because it taught me to have some grit. In sales, it's dog eat dog world. And when I got into commercial real estate, it was the same way. I was in kind of a boiler room type of situation, and figuring out, in a very, very ruthless market in Chicago and a ruthless industry as commercial real estate. That really helps me as I got into residential real estate, because not everybody takes the professional approach necessarily in residential real estate, because you have a lot more realtors, a lot more people that are kind of part-time into it. So if you could take a professional, analytical, commercial approach to residential real estate, you can be successful. And I could write a book on that. So,
yeah. Listen, this is gold right here. Pause, rewind, listen to it again. It is expected when you're in the business of commercial real estate. You just said that everything is run like a well-oiled machine, that everything is, B2B, right? But when you get into the residential space, there's a lot of B2C, there's a lot of part-time. And when I say B2B, business to business, and B2C is like business to consumer. And so when I first started, exploring my personal real estate investment journey, I was like, hey, I'll get licensed. That'll give me a good backdrop to it. But what I found was a very deep rut of people saying when you get your license, you transact and you're at the whim of all sorts of buyers who may or may not buy from you. And eventually one day you'll make it to a listing agent. And then after that, you can eventually, you're talking about investment real estate. This is where people live. I'm like, exactly. So I love what I'm hearing right out of the gate, that you can create a blue ocean strategy. You can create something that's not very typically experienced in the residential real estate space because you're bringing that level of expertise and business savvy to it. So can you bring us into the story, what was your first purchase like? And then, how did you wind up now consolidating to 20 units?
So, right after the great financial crisis, I spent a lot of time buying and remodeling foreclosed properties, and you couldn't get a purchase loan. But you could get a refinance. So I found a hard money lender, got a that would loan us some money to acquire these homes, and then we would go and find an investor, like you say, a B2C, a consumer, somebody who really wants to get into real estate investing. They didn't know what to do, so we come into them and say, listen, you can just refinance right into this. You're not going to take any cash out, so you're going to own this home at 65% loan to value easily, and we'll help you manage it. And we just kind of built our own turnkey business. And not all turnkey businesses are the same. And I think turnkey is a terrible term in real estate investing because nothing is turnkey. You have to make decisions on a daily basis or a weekly basis. Even if you have a great property manager, you have to be involved. It's a contact sport. So we started buying these homes and for investors, and then started taking those profits and buying a 2-flat or a single family home here and there, and some apartment buildings and things like that. And I learned a lot of these skills in the like you say, in the commercial real estate world. What I found is, back in 2012, my first client that I got was Invitation Homes. So my first big client, I had a lot of small clients. And so we built a whole team of people that we bought homes for Invitation Homes. They bought about 10% of the homes we presented to them. And the rest of those we put out as a hot sheet to the investors in the local market. And the way that I really did well with the investors, I would go to them and say, hey, I'm going to make 3% on this, but I'll give you a point back on every single deal you do with me. And I made a career out of representing buyers. I didn't care about listings as much. Now, as portfolios traded and things like that, I sold thousands of properties, but I really focus on giving that service and saying, hey, I've underwritten thousands of homes. I know the institutional model for underwriting. I know what they look at, and I'm going to let you benefit from all the hard work I've done, and I'm going to give you even a rebate back. And some people look at it as it's not bribery, of course, but it's just becoming indispensable for somebody. And that was a way that I got to show. And after a while, they started saying, I don't want your rebate back. You're saving me so much money, that they would bring deals to me all the time. And they would just bring me deals. And I would even say, hey, bring me your deal. I'll give you even a bigger rebate. If you find it, bring it to me and I will underwrite it and help you manage the process. And very professionally, and dealing with a lot of agents that weren't professional. I was very professional always, and down to capitalizing your sentences and punctuation and a signature line. It's still today, it's crazy the stuff that you get back. So that, and I started buying homes throughout all that process, and trying to look at that, because I looked at a lot of people in the real estate industry that, they would help a lot of other people make money. And I did this for a really long time, and then I wasn't doing it. Right. So started buying some houses, and, it didn't always go great, especially in Chicago. It was a little bit of a tough market. And so just trying to practice what I preach and helping people is to help myself a little bit on the investing journey.
Yeah. So if I'm hearing you right, like you were in the agent side of the business working
Yes.
with people. And yeah, so many people like Alyssa and yourself get in at the agent side, and it's not, you came in with the advantage of the commercial and understanding how to do the underwriting, where most people don't even understand how to do a good deal analysis. So that really is a great advantage to come in with. So, what do you find is your biggest struggle in real estate today?
Finding deals that work with the current debt and the values of homes. It's interesting because right now I still, what I do in my current business is we work with institutional investors, small investors, and the current company I have, we have all kinds of things: lending, asset management, title insurance, and property management, and real estate brokers, all this kind of stuff. And finding there's plenty of capital out there. On a larger scale that want to invest, but what's interesting is what people don't realize is the small investor and the medium and small size investor, they're buying just as many homes as they used to. It's the larger investors who can't buy at scale and hit the numbers that they want to hit, but the small investors that are very local and understand their market
And constantly out there, right?
Right. They go to the investor meetings, they really integrate themselves in, and they find the deals that work, and they're patient, and there's plenty of homes for them to buy.
I love hearing this because I hear this story all the time. I can't find anything. And I'm like, well, first of all, how many offers have you made, right? They come in and they look at a deal and the numbers don't make sense. Well, if they make sense to you, make the offer. You never know. And
you never know.
20 or 30 offers a week, you're going to get an offer taken. You are.
And it's work. It's a lot of work, right? And so you can't just sit back and expect to find deals. I mean, it got really easy for a few years there. The problem is that people don't realize how much money they were leaving on the table, for one, because the debt was so cheap. And so you have a lot of investors now who are in trouble, and they're looking at things going, I don't know what to do with this. And maybe it's time for a fresh face to buy that property from them, and buy it kind of out of, I don't want to call it distress, but I mean, our company has a ton of loans, and I'm part of a team that we're currently right now calling all of our distressed borrowers and finding out, why they let go of a property or why they didn't. And many times it's just, they got ahead of themselves, and you don't realize how much money you're leaving on the table till you look back and go, wow, every single time I didn't fix something when I was supposed to, every single time I didn't invest that energy into giving a good tenant experience, I was not getting the rent that I could have gotten, and I was losing money, and it all starts to add up, those little bit of margins that you miss out on. And so you have to maximize that stuff.
Yeah, that's a great piece of knowledge there. And everyone should be listening to what you're saying, because those are the questions I'm getting. So I know there are people out there with the same issues.
Yeah, there's deals out there as long as you stick to your guns, right? And there's a lot of I see a lot of deals that come through, and portfolios and homes that are, the underwriting on paper looks good, but then when you underwrite it yourself, or your trusted real estate professional, because not everybody's good at underwriting, and that's okay, but you should definitely learn and be able to read those things and have somebody that you trust that maybe isn't always in on the deal, right? So if it's hard because sometimes agents want to make the deal work because they're going to get their commission, and that's not a bad thing as long as their numbers are accurate. And so, I find a lot of investors, they might be good at remodeling, or they might be good at buying, but they're not good at remodeling, or vice versa. So you have to know your strengths and find the trusted people. Because look, a good agent who's looking for deals in a market, they don't want to waste their time. So if they're good, they're going to show you the deals that work, and they're not going to show you a deal that has bogus numbers that don't make sense, that when you get into it, it didn't work, because you're not going to buy more homes from them. So the good agents will help you there.
Yeah, the thing is, when you're an investor, a lot of agents say they're investor friendly, but they don't understand how we work. So having an investor friendly agent is really of value to investors. And I talk to agents about it frequently. And it's the same story. It's like, they don't get it, but
it's the same thing with turnkey, right? You get,
so I owned a turnkey company. I get it.
Yeah, I say likewise. And so it's hard because there's a lot of companies out there make a lot of promises. It's no big deal. Just own this home in Birmingham, and everything's going to go great. You don't have to worry about it. And, everything's, I have a lot of people that come to me and say, I bought 10 homes in Cleveland that the rents are $700 a month. And the remodels on these homes, the turns are going to take more than a year of the rent. And so you have to understand your thesis.
Yeah, 100%. Understanding your numbers is key.
Yeah.
So you said you're a property manager. What part of that do you like or not like doing?
Not very much of it. No, it's so I helped build up a couple of property management companies. One of them is called Renters Warehouse. I was one of the very first employees there, and and help grow that business and mostly grow the institutional and kind of mid-sized investor business there. Property management is not an easy business. And frankly, most property managers, because of the way the market is, don't charge enough actually, because of the amount of work that it really does take. There's not many homes that you can just sit back and collect rent and not worry about it. Not everybody's a perfect tenant, and you're going to have problems, and you need to make sure you have the right model of how you're saving money so that you can pay for those fixes, because you see a lot of people who they have one big issue and they go, well, I got to sell the house, but they're not looking at the big picture. You should understand what your, on just basic rent increases and appreciation means for you in 5 and 10 years. Because when you look at those numbers, you become very, very motivated to make sure that you get to that point.
Yeah. So one of the problems that I see in the industry is reserves, right? People
Yes.
when they do their calculation, they don't put in for reserves. And then you need a new roof and, oh my God, I don't have the money, blew your whole year's rent plus some, and they didn't think about it. So, when you're doing your numbers, that's a very important number to figure in there.
Yeah, and it's important to make sure you understand what you're getting into before you buy that house. Are you buying the house with the current roof or the windows? What kind of work has actually been done, and where's the home located? What are the St. Louis, for example, main sewer lines? People get tripped up on that all the time, and they look past it because the deal wouldn't work if they fixed that. But you know what? A year later, now the city's coming to them and they have to fix the main sewer line. But property management itself is a very undervalued business. It is not a high margin business. You have to watch out for the property managers that are actually a maintenance company with property management as a lead source. So there's a lot of different things, but I've worked in large property managers. I understand the small property managers. Find somebody who's going to do a good job for you and make sure they're not overextending themselves by growing too fast. And frankly, if you can, manage a home yourself for a little while. Then you'll understand.
Learning's a good thing to do, but I owned a property management company as well, and I'm happy to pay someone to do the job. So
yes,
once there, then you can avoid going back or really own it. But it sounds like you've done a lot of things right. You've had a bunch of really cool education along the way from your professional career that allowed you to become, as the kids say, successful in your real estate holdings as a single family home owner. And so I grew up in a family where boring, long-term rentals was the way to go and never say sell. So can you share with us, as we're wrapping up our interview, we'd love to know like a recent win from your journey. Can you share a story or a lesson that you've learned or won recently?
Well, I can say this, during the last downturn, my father and I went in and we bought a bunch of lots that were sitting around in Granbury, Texas, and just held on to them, and then slowly built a home, refinanced that, used that to build the next home. And it's really not the Burr method necessarily, because that's a little bit difficult in certain things, but now we've got these brand new homes where only 2 of them are financed, the other 2 are not, or there 4 are not, and then we have other parts of our portfolio, and that was a big win because we were involved in the build. I think sometimes you have to be careful in new construction. Their homes aren't built like they used to be built, and so that can cause some problems for rentals. But that was a big win for me, being able to really cultivate that and kind of see that process happen. It was a little stressful for a while as we're building these houses ourselves, but it's all good. It's all good. I think real estate investing is the way to go, and I think there's a lot to happen in the next 5 to 10 years. There's a lot of different things happening, and the market's it's going to be interesting to see. But people need housing. And don't believe everything you read about investors being bad for the housing market, because a house is a house and somebody needs to live in it. Somebody either needs to rent it or own it. And, it's gotten tough.
And states aren't making it easy for the landlords to get the houses ready for the tenants. So I get it.
No, they're not. It's getting harder and harder to own a rental home. And, it's interesting because not everybody's destined to own a home. Not as everybody's destined to rent a home, but more people are becoming renters by choice. And that's not because of investors. It's really because of our housing finance system. It's a little bit broken. So I could go into that for days.
Yeah, I don't think it's just that though. I think younger people like the ability to just move. Like they don't want to buy a house here and then move in 2 years and sell, and they just want to be free. And so having places to go is important. So it's going to be interesting to see what happens over the next few years and how
Well,
things.
I've seen in my last company of renters, we helped a lot of higher earning tenants be able to invest and own where they couldn't own a house in Seattle, but they could own a house in Alabama. And they started their investing journey. It's okay to do that. It's okay to rent your home and invest into real estate. It's not the end of the world. It's actually not a bad idea.
I love that. Where were you 10 years ago when I was like, I'm going to go buy houses? And they're like, no, you have to buy your house first. And I believed them. I mean, hey, the best time to invest was 20 years ago. The next best time is right now.
Yeah,
So,
I agree. If you looked at my LinkedIn, I was talking about this a while ago, about 8 years ago.
Yeah.
I started investing 40 years ago. The only deals I'm sorry about are the ones I either sold or I didn't buy.
Yeah.
Nothing about the ones I bought. No matter how bad the deal was, if you hold it, it's a good deal.
Yes.
So as we're coming to conclusion and you're hopeful for the next 5 to 10 years, what are some of the exciting plans or initiatives you have in the works for the next 6 to 12 months?
So we are starting to, as a company where I work, we're starting to, we're actually building out a national real estate brokerage that's focused on investors. We're starting to help so we have a loan servicing book that equals about 40,000 SFR investors, and we're starting to help cultivate those investors to sell what they need to sell, the dogs of their portfolio, to help buy more. And so that's very rewarding. It's always fun to buy for the large institutional investors, but it's much more rewarding to help small investors in their journey and provide those tools for them. And so that's, been my baby and what I'm doing here at Ginstone. So, and I'm hoping to be able to start investing and buying some more houses as we're starting to sift through and look at thousands of homes to find homes for these investors, where there's always going to be homes that could work for me personally. So,
Awesome. And you'll still have the pick of the cream of the crop, right? Yes. I love that as a business model for you. So thanks again for being here with us for Built for This. We know that you were built for this. Where can people go to find you if they want to connect and learn more?
The best is LinkedIn. So I've gone off and on the last few years, but I've posted about 800 videos on LinkedIn about real estate investing. It's more breaking down the real estate market in layman's terms and just talking about what I'm seeing and what I'm doing. I'm not really trying to sell anything there, but you can see what I do and where I work very easily there. So LinkedIn is the best way to find me.
Right on. And you heard it here. It doesn't matter where you come from. Get involved in real estate. That's what we're pushing here. So whether it's generational or it's something you just have a desire for, reach out, get connected, because the world is a better place by, taking your shot and making your business a reflection of who you are and the skills that you've developed over time. So thank you so much, Noel, for being here with us. If you're listening to this on the broadcast, stay tuned. We have another amazing guest lined up for you right after this. Don't go away.
This wraps another episode of Built for This. If you're a real estate investor with a unique edge, apply to join us at builtforthisshow.com/guest.